Okay, and we are live. How is it going, everybody? Happy Monday, live with Dr. Roy. How's it going, Roy?
Good. Yeah, I shifted my desk around. I feel like I'm off center or something. So if it looks different, that's what's up. But yeah, it's good to be here. A ton of news. Mondays are always full of news, especially in earnings season. So tonight, of course, we're going to be talking Rocket Lab earnings. We might talk just a little bit about HIMS. We'll talk about the Nvidia deal and the massive private equity thing that's happening with investment in data centers. A little bit on CRWV NBIS pre-earnings, just kind of things that we're looking for that we didn't get to talk about on Friday. As always, your questions and answers as well. Well, I guess your questions are answers, and thank you guys for being here. Yeah, we're going to talk about that.
Let me make a list in the private chat. So we got to do HIMS and Rocket Lab earnings.
Palantir, the Michael Burry thing.
CoreWeave and NBIS pre-earnings, Palantir, Burry latest, and then Johnson interview. All right.
Yeah.
Are those the four topics?
I believe so. Yes. Yep.
All right. Where would you like to start?
Let's start with the most recent earnings, Rocket Lab. So you're a shareholder. You made some moves beforehand. And I'm assuming that you got to see the report. I looked at it just very briefly as well. I'm not a shareholder. So I guess you want to tell us first the conundrum that you had to resolve, because I think it can help people process through what they plan to do for pre-earnings moves, not necessarily with Rocket Lab, but other names as well. And then if you want to touch on the earnings, I have like one or two notes there as well.
Yeah, absolutely. Okay, I'll walk you guys through my trade that I did, which is not recommended, but I mean, look, I know my risk tolerance and all this stuff, and I'll walk you through like how it can go right, how it can go wrong in the context of Rocket Lab earnings. So as you guys know, I have a position in Rocket Lab, and I bought 400 shares. Let me pull this down here, maybe, or we can keep that. I'll just zoom this in. All right. So I bought 400 shares of Rocket Lab, right? And I bought them at about $62. And I immediately, or almost immediately, wrote $75 calls. Those calls were expiring this Friday over earnings. Now, because Rocket Lab went on this monster run that it did, the calls went underwater almost immediately. And so I was left with a couple of options. Option number one is do nothing. And if it's over $75, I think I got like $2.50 of premium, and the shares get taken away. That's the easiest option. Okay. You basically pray for it to go under 75 to keep the shares. And if not, then you lose the shares. Option two was I could roll these up. Now, I could roll these up to $80 2 weeks out, and I got a small net credit. So as you can see here, I closed them at $10.34. Keep in mind, like $2.50 was what I initially collected. So I was like down $8, whatever. But I reopened them for $10.68 for September 4th. Okay, so this is 25 days out at $80 a share. So you might be saying, all right, why would Tevis, basically break even here? It's because I raised the price by $5. So I'm allowing myself to have $5 more of capital gains that I'm exposing myself to for just waiting, 3 more weeks. Okay, cool. Now, that's all well and good. Now, let's look at this in isolation, okay? What is the benefit here? The benefit here is that you're realizing, the drawback is that you're realizing the loss upfront to potentially have a higher gain 3 weeks down the line. If Rocket Labs keeps running up above $80, you're still going to get your shares called away, but you're going to have $5 more of capital gains from 75 to 80. Now, if Rocket Lab is under $80 in 3 weeks, then you get to keep your shares and you basically have got yourself out of a jam. Okay. You keep your original premium, the $2.50. Now, in addition to that, I added another little kicker, which is I added this little leg here, which is I also sold the equivalent amount of $65 puts for that same date. And I got $1.73 for that. So by doing so, I essentially created a little spread for myself between $80 and $65 3 weeks from now. Only one of those can get hit, realistically speaking. The ideal case, if I wanted to keep my shares, was that Rocket Lab trades in between these two prices in 3 weeks. If 65 gets hit, then I get saved on this leg, but I double my position, let's say at $65. If, let's say, Rocket Lab runs after earnings, then I get to keep $5 extra from here, 75 to 80, plus the difference between these two numbers, so about 20 cents of credit, plus the original 250 that I wrote the 75s at, plus I now get to keep this 173. So I just expose myself to more premium income on the upside. I expose myself to more potential shares that I'm committing to on the downside. And in the best case scenario, Rocket Lab stays relatively flat over the next 3 weeks. And so there's a couple of pieces here. Number one is I'm signing myself up for 3 more weeks, right? Whereas if Rocket Lab tanked after earnings this time around, I could have gotten out scot-free. I put my hand in the cookie jar and I got it out, didn't get caught because Rocket Lab would be under 75, which, by the way, after earnings, Rocket Lab is at $75. So if it trades down, I could have gotten out. But this is I obviously can't see the future, right? So I don't know what's going to happen on earnings. Rocket Lab could have been at $95 for all we know. However, what I was telling myself was that in spite of all of this, the IV was going to get crushed. Okay. So because there was earnings, there was a big event, and the implied move was about 15%. Tomorrow and going into next week, the premiums are going to fall because that IV crush is going to happen. And so for me, I could win on potentially both of these, even without holding until September 4th. Okay, so this is, I think, one piece you have to keep in mind. But yes, this for me is one of the more tame trades. But again, it's how much premium can I maximize from Rocket Lab in that particular trade while holding those shares. All right, with that, Roy, I'll let you comment, and then we can jump into earnings.
Yeah, I think Mr. Premium of the option has it right. It's essentially a covered strangle, and so you're gonna it could fall in between, and that's great for you actually. That's the best case scenario. But worst case scenario, the worst case scenario is not bad at all. You own more Rocket Lab. Obviously, Rocket Lab falls to $5 a share. That's not happening, but yeah, realistically, these are good problems to have when you're shares that you bought and you sell options and they go quickly into the money. Yeah, it's not a bad problem. So yeah, I feel like this is very conservative, but that doesn't mean options are for everybody. But for Mr. Degen below me, this is like buying shares of the S&P 500 and not looking at it for 10 years. That's the level of conservatism. So you're maturing, Tevis. So, but no, you've it makes sense to me. Now on the Rocket Lab earnings itself, it is down, like you said, after hours. And how much of that is results? How much of that is the update on the Neutron rocket? How much of that is just hey, it ran up here recently, and so there's some profit taking? All right. And is anything changed in your mind with this play?
Yeah. Okay. Let me jump into that next. So Rocket Lab came out and they reported earnings earlier today, just an hour ago. And here we have their numbers. Okay, so they reported 8 cents or negative 8 cents of EPS and 234 million versus 230 expected, about 1% beat. Now that is not the interesting piece. The interesting piece is down here. So I made a short about this, shameless plug, where I actually posted a little 1 minute. That's why the things are highlighted. But 234 million in revenue, up 62%. Very small beat on what analysts were expecting. But this is the interesting piece, right? More than $1 billion in new contracts across launch and space systems in Q3. 2.36 billion in backlog, a 137% increase. As we know, they bought Iridium for $8 billion recently. $437 million in new launch contracts during Q2. plus post-quarter signings expand the total launch backlog to its largest in history with 90 plus launches. Now, being Rocket Lab, also on earnings, they had a couple of press releases. So number one was this Ghost system. So this allows them to essentially launch from anywhere around the globe, if I understand this correctly. Multi-launch flight campaigns and critical national security missions. This sounds really cool, actually, as I was reading a little bit about this. And then the second press release that they highlighted was a deal with a Toronto company, Kepler Communications. One of my friends actually worked as a hardware lead on Kepler, but this is like, he's not there anymore. So I was like, oh, that's a blast from the past. Launching with Rocket Lab no earlier than 2028 on the Neutron rocket. So Kepler has satellites. Rocket Lab is essentially launching with them. So that's the high level on Rocket Lab. I think they also raised their guidance, which is a big piece here. As to why the stock is down after hours, I mean, I don't know. I think a lot was priced in, you could call it. I mean, the EBITDA meeting expectations. Something else that I might have missed. This is only a cursory sort of glance at the earnings. Roy, what did you make of them?
Yeah, I mean, like, I'm not a shareholder. It looked good, and I also appreciate it. Like, I think there's maybe two reasons why it's selling off. Like, one is if you're just looking at the numbers and that's it, outside of the backlog, it's like, oh, it's way far ahead of itself. I don't think it's that far ahead of itself. It's probably closer to fair value than anything, but I'd have to do a lot more work to determine that. Backlog, like with the names like this, Voyager, other space names as well, it should be all-time records almost every single quarter. That's just kind of the structure of the business when you're in this part of the curve as far as the business grows. So I wouldn't read too much in that. The Neutron rocket update that Peter Beck had. Let me pull up the quote. There was another delay. Basically, Neutron. So I don't think that this is bad. And I don't think it's bearish. I prefer a CEO that is brutally honest with exactly what's going on instead of just telling shareholders what they think shareholders want to hear and the market wants to hear. I don't like that. And once I figure out that there is an investor or a CEO that does that, I avoid them at all costs. So here, Peter Beck is just brutally honest. And yeah, it's right there. While the window for a year in launch is narrowing. So in other words, it's probably not going to happen, but it still could. And to put this in context, I believe Rocket Lab was initially looking at launching Neutron in late 2024. Delays in this industry, though, with launches of like brand new things that you've designed, it's extremely common. And I mean, you can look at SpaceX. It's not just Rocket Lab. It's not a really problem with the firm. It's just what this space is like. So while the window for a year-end launch is narrowing, the work we're doing now is about risk trading, balancing the timing of our first launch against how quickly and seamlessly we can scale our 10th launch. Our focus is on the bigger picture and making sure that when Neutron flies, it enters service as a system ready for full-scale production and high-cadence launches. And so, again, the goal is not just, if the goal was, hey, let's just pump the stock, he wouldn't say this at all. He'd be like, hey, whatever the cost, we're going to launch this thing by the year's end, because we said that we would, even if we're not ready for any kind of revenue ramp with Neutron, because there's things to work out. They're doing it the correct way. This is the correct way to handle this sort of thing. Otherwise, you overpromise and underdeliver. And we've seen like ASTS, has gotten hit from that. Outside of the space arena, like HIMSS, we're both shareholders that reported tonight, and we will talk maybe a little bit about that. They tend to guide extremely aggressively. And so if they miss at all, their stock gets punished. So I like this. I also like it as an outsider who doesn't own Rocket Lab, because I think it's a very fine company. And if the whole space sector or just Rocket Lab wants to come down a lot, I know it was down lower here recently, I would be very interested in getting a position if I had money. The problem is it's invested in other things, but there is a point where I'd sell and I'd buy Rocket Lab.
Mm-hmm. Yeah, totally. I mean, look, I'm not too concerned about the delays. Of course, I'm a newer shareholder, so I can understand how people are concerned, because this is not the first time, and a lot of people might say, hey, look, this is not going to be the last time. But at the same time, like, I think the company is definitely executing, right? They're signing all these new deals. They have a huge backlog ahead. Like, the future looks bright for Rocket Lab. They're a smaller company, right? And so It's kind of to be expected. I'm not too concerned about it right now. At the same time, like if Rocket Lab decides to be down 5% on after hours, that's honestly fine with me. It's not like I would rather have a delay. It is good for me. I would rather have a delay in Neutron being the big bad wolf than them lowering guidance or them missing their numbers or anything like this. I think that's just it's logistics more than anything else, and I'll take it.
Right. Yeah. No. Yeah. Overall, seemed very good. Another check off quarter, and things are progressing very well. So no big concerns from what I saw. You want to talk just briefly on HIMS?
You know much more about HIMS than I do at this point because I didn't really look at their earnings, but I can pull up their press release.
Yeah, I'll kind of give like a quick overview on it. I did not listen to the earnings call. Well, I listened to like 5 minutes right until the Q&A, and then I had to start getting ready for this stream. So Yemi was talking, and he's great, but so they beat on revenue. They ended up missing massively on EPS. We'll talk about that in just a second. They revised guidance, so upward for revenue, downward for EBITDA. And so a lot of it has to do with, except for the miss this time, with basically building out these long-term, the acquisitions, building out these long-term offerings. And so didn't seem overly concerning to me. Again, I didn't listen to the earnings call, but the big thing was this right here. They issued the 10Q at the same time. This is a little bit blurry because I've blown it up and I put it on X, but there is a new line item here that's maybe hard to read: legal contingencies. And that really is what caused the EPS miss more than anything. And yeah, it's one of the reasons why we got out. There's a lawsuit risk, and contingency, by the way, doesn't mean that you lost money. They did talk about in the earnings call. I caught just a little bit of it. And also in the SEC filing, they always have, like every major company has, whatever lawsuit challenges that they're going through. HIMS has a lot. They're in this space, in this business. Actually, kind of like the company. I hope that they disrupt in the area. But yeah, you can see here how much that this is ramped. So 6 months ending in June 30th, it's up to 62.5 million. 3 months ended in June 30th for 47.5 million. So that's the cause of it. Doesn't guarantee that money is gone. It's just there because of all the legal challenges they have faced and they continue to face. So yeah, I don't like, at least in my mind, again, I didn't go through with a fine tooth comb. I did look at the slides and the overall numbers. Earnings call might say something completely different, but it seems like if you're already in HIMS, if you've stayed in HIMS all the way through this, it seems not bad. Like nothing has really shifted and changed negatively. Long term, there's still a lot of opportunity there. Short term, there's still some challenges that they're facing. Stock was down by about 6% prior to this. Let's see.
Yeah, I mean, look, they also beat revenue, right? 38% year over year for revenue. I believe they also did make an acquisition, a small one. But if you're a HIMS investor, the legal troubles are not a surprise to you. I mean, this is something that's been going on for a while. And it's kind of funny because it's so prevalent that they literally include a line item for legal, because it keeps happening, man. They just keep getting into these lawsuits and they keep getting, in trouble with all of these government bodies as well as the bigger players. Now, is that coming with a territory? Like, do they have to be that to be the new guy, the new kid on the block, essentially, to carve out their own TAM? You could argue that, but
there was always going to be some, like, even if everything was above board and there was no issue, but they like to push the line. So there's going to be more than what you would expect from anybody in the space. And they're a big potential disruptor. So, like, again, even if everything was great and perfect and legal, they would still have legal challenges just because of where they're at. So
they also cut guidance. I think that I was seeing they cut
EBITDA. They raised revenue guidance by a little bit, and they cut EBITDA guidance a little bit as well for the rest of the year. That one was more for basically investing in long-term opportunities, as according to their language, which I believe them. I think that's a right approach. Actually, I think that's a really nice thing, because a lot of times HIMS has been so focused on that quarter and like the very next quarter that they're willing, I wouldn't say to sacrifice a long-term, but they're so focused on the short term, even while trying to balance the long term. This time it's like, hey, it is what it is. We're going to cut our EBITDA guidance rather than just guide very aggressively and miss. So that actually I really like. So
let's just pause for a second to read this. Josh believes that Roy makes the best content on YouTube. So much so that he donated £5. That's like 50 Canadian dollars.
Yeah.
Saying, I Roy 50% of my portfolio in neoclouds with 10% in SoFi, Palantir, Zeta, Mercado Libre to balance. So bullish on compute. Why don't I go 75% neocloud? 25-year-old, £100,000 portfolio. First of all, congratulations at that portfolio at that age, Josh. That's a big deal. I'm sure we're going to talk about the Jensen interview, but Roy, any thoughts here?
Yeah, all of those names, maybe Melly less or so, are all very volatile. And you know that I love SoFi and Palantir. I think Zeta is at least a good opportunity, and Melly likewise. If Nubank didn't exist, I'd be a Mercado Libre shareholder. Really good company. So I think it always makes sense to concentrate in your core convictions up to the limit of your what you can stand for volatility and what helps you basically sleep at night. So you've held, assuming that you held these names, these 4 names plus the neo clouds through the recent volatility. If so, and if that didn't cause you to lose sleep, yeah, that's probably the right thing for you to do. It usually makes sense to follow and concentrate on your core convictions. Now, 75% neo cloud, you just have to kind of think through things, but you're 25 years old with 100K in pounds. Look at what your goals are. If you don't have retirement goals or like that number that you need to get to, I would give you that as homework. You need to figure out basically what it's going to take to get you to whatever that goal is, whether it's owning a house, whether that's retirement, whether it's a car, whether that's like Tevis, you're trying to find a wife and they're very expensive. No, I'm just kidding.
They are
only kind of, but
they are.
But no, like know your goals. And then if this is like, hey, you need to do this for your goals, it lets you sleep at night, it's where your convictions are, nothing wrong with that. But also like if your goals are very modest and you're like, hey, I want to buy my own home in 3 years and 100K, and you're like, hey, just more conservative investing would get you there. There's nothing wrong with taking risk off the table. So make sure that balance it with your goals and your risk tolerance. But if you're like, hey, it's in line with my goals, it's in line with my risk tolerance, and that's where your core convictions are, then why not do that? It's not financial advice, of course, like anything that we say, but yeah, it usually makes sense, whatever your core convictions are. And I'm assuming, Josh, as well, that you've done your due diligence. Don't just, by the way, thank you for the comments. Don't just rely on my due diligence or Tevis's. And I'm sure that you're not if you've been a shareholder in these names for this long.
Definitely not
mine. Easy to get rattled.
Yeah, definitely not mine. Full port iron, young Trout says, don't do this. Do not. Don't full port
Jim is a wild man. Like he's like 97 or 98% iron. Like brilliant guy. And he'll probably be just fine. But yeah, that would scare me. Boy.
I'm 75% neoclouds. You will survive. I agree. Having a wife and kids are so freaking expensive. Tells you why I'm here. Yeah. I'm sure Roy agrees. Yeah, maintaining a wife is very expensive. Acquiring a wife is expensive. Thanks, guys. Really encouraging stuff from you guys. The peanut gallery over here. What's our next topic, Roy?
Why don't we touch on Nvidia? It's a big topic, the private equity and then the Jensen interview itself. So there were rumors, and it seems like I saw a post from Amit earlier. Let me pull that up, that they were confirmed. It was initially from the Financial Times. There's a 2-minute CNBC video. I don't know if we want to see that. I know there's a full.
Let's throw it up. Curtis says losing a wife is even more expensive. Ask Bezos. I mean, dude, he's buying Liverpool. Did you see this, Roy? Can I just talk about this for 1 second, actually,
sure, go ahead.
Before we talk about that? Because this was news to me. I posted this earlier today. Jeff Bezos wants to buy Liverpool. This is why he's been selling Amazon stock. I said, normal person, midlife crisis, they buy a sports car. I guess if you're a billionaire, you buy a sports team. We'll see if he actually goes through with that purchase or not, but kind of wild.
Yeah.
Thoughts?
Yeah. I mean, I don't, outside of the World Cup, I don't really follow football/soccer. Yeah, it's, if I had more time, I'd love to, but yeah, I just don't. So we haven't covered the NeoCloud earnings yet. We'll probably do that right before Q&A. But this right here came out today. And so one of those things that's happening, is very prominent this earnings season, is even the hyperscalers are tapping into debt. Of course, CoreWeave has tapped into a lot of debt. Oracle already has a lot of debt as well. A lot of that's tied to take or pay contracts. But the bonds, the cost for bonds, even for the hyperscalers, is going up and up. So also for CoreWeave, certainly for Oracle as well. And so Nvidia has back-ended some of these. And so they actually gathered together a bunch of these firms, 6 firms there: Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR, largely private equity. And so this is exciting all in hand, at least to me, and also a little bit scary. This is like a 2-minute video. I don't know if we want to play that first and then talk about it, or let's go ahead and do that.
Let's play it. Let's play it.
I want to thank all of my partners for joining me here today. I think this is the first time this has ever happened before, and I can't imagine a more important time to do it. We're announcing 6 partnerships today. These partnerships are going to pull together independent long-term capital to fund and support AI infrastructure build-out. This is an extraordinary time, as you know, because this is the first time in some 60 years that the computing industry is going through a fundamental platform shift from the way that software was done before to the way that it's going to be done in the future, called artificial intelligence. Fundamentally, what's different about this industry and this way of doing computing is that the computer is now part of the infrastructure, like electricity, like the internet. And so you have to think about it like it's infrastructure and build it out accordingly. Every company will be powered by it. Every country will build it. And so we're talking about a extraordinarily significant infrastructure build. This is
with a very hefty price tag, too.
It's a hefty price tag. Each gigawatt is something like $50–60 billion. And so there's energy involved, there's land, power, and shell involved, and of course there's the computing part of it. This is, of course, also a milestone for our company. We used to build chips that we sell, and these are technology components that people buy and use. Mm-hmm. But now NVIDIA's AI factory platform is really an investable asset, an infrastructure asset. And the reason for that is because it's productive, is revenue generating. It is fungible. It's used by just about every cloud service provider. It runs every AI model. It runs algorithms of all different types. And so it has really broad, deep reach and off-takers. This is a really great opportunity for us to build out the infrastructure, take advantage of an asset that is investable, long life, and productive, and with the partnerships that we have here.
So on that, if you can throw up in the streets comment at 629, they said AI cannot fail now. There's 2 ways to take that comment. I think both are right. One is AI can't fail now because, like, hey, one of the issues has been raising funds for this. $500 billion is a lot. I mean, it's an insane amount, actually, $500 billion. But the other side of this too is, even though I think that the risk is small, it is still worth appreciating. If something happens, all this money's invested, and for whatever reason, there's no return, that there's problems in the industry, companies go belly up. This now affects a much larger swath of the economy. It's not just about GDP. It's hitting these private equity firms, which are tied to a lot more conservative investments, including retirement accounts. And so the risk of contagion here of a sort is a lot more palatable. I think it's bullish overall. But there are some risks, and I can see why some people might have some concerns. Although, if you listen to this Jensen interview, I caught just a little bit of it, but I actually wanted to save most of it from here. It's pretty exciting. What do you think about this, Tevis?
So first and foremost, the interview is very exciting. I think you should listen to more of it because they talk much more in depth around this. And in overall, I can understand the contagion point. I think that's a great way of putting it, because if you buy into this belief that AI is a bubble, you're ensuring that everybody gets taken down from it. And we had this critique around the circular investing from Nvidia into OpenAI, and all of these hardware, software, whereby I invest money into getting shares of your company and you make a commitment to buy my product, and thereby both companies get a lift. Nvidia, as we mentioned in previous weeks, Roy, is the reason why a lot of these companies in the AI space are as successful as they are, right? One of the guys there mentioned CoreWeave specifically. Actually, he named CoreWeave, And he said, look, when CoreWeave was a smaller company, it was riskier for them to get financing, and the financing had a higher premium. But through this deal, or as they mature into public companies, financing becomes much easier for them. And so I think this is going to be a supercharged. Now, to flip it on the other perspective, the bullish perspective, this is going to be supercharged from an investment point of view. One thing that Jensen said in that interview, which, I mean, we should watch it, but one thing that Jensen said in that interview was he said, I think we will see in the next few months that AI is profitable, that the token arbitrage essentially is profitable, whereby I can sell token, or I can have higher ROI on my tokens than they cost. That's really interesting. He said that AI labs and also these other companies, he didn't specifically name neoclouds, but if the AI labs are profitable, then obviously the neoclouds are going to be profitable.
He's thinking about Nebius and CoreWeave when he's saying these comments. So.
Well, you know what? He's talking his own book, and that would be my critique for this, because if it wasn't Jensen and it was just some other person saying all of these comments, it would be super bullish for the AI space in general. But the fact that it's Jensen, it's like, dude, Nvidia is at the core of all of this, and they will benefit. They are essentially building a market, let's say, from the ground up, right? They need to have a network. They need to have the infrastructure from the neoclouds, from all of these AI labs to ensure that they're competitive. They need to see the efficiency unlocks all the way down to the ServiceNows of the world to establish guardrails and governance and all of the orchestration layers that are associated. Nvidia needs to have their hand in all of these different cookie jars, because by ensuring the success of the network, the establishment of the network, Nvidia is the nucleus of that network, and they therefore will benefit for years and decades to come, because everybody's going to buy Nvidia hardware. Don't forget that this hardware depreciates, and it's abstracted away. Let's say at a certain point in time, it becomes I won't say useless, but definitely degrades in function, and so Nvidia is going to be a necessary evil. And so Nvidia right now is seeming altruistic, let's say, to keep AI alive and to ensure that it stokes the fires of AI. But once that fire starts raging, Nvidia is the biggest beneficiary that's going to be kept warm by it for decades to come.
Yeah, it's why I continue to hold Nvidia, even though I'm like, hey, I think other names might outperform. It's like, I got to have some Nvidia. I'd love to add too,
One thing I'll say also, because the good news for Nebius, this is good news for Nebius, and this is going to dovetail into our earnings thoughts. But I think that, if let me just quick 15 seconds on this. This deal was announced today. This deal has been in progress for a while. Okay, let's just say 6 months for the sake of it. And the reason why we say that is because these are 6 of the biggest, institutions out there. You can't just put a deal like this together willy-nilly overnight, over a weekend, right? This has been in the works. Nvidia is super close to all these neoclouds. Again, I'm just using first principles thinking, just logical analysis here to come to this conclusion. Nvidia is close to all of these neoclouds. As a result, these neoclouds likely know that this financing option is going to become available to them. Now, if you were the CEO of Nebius or the CEO of CoreWeave, and you knew that there was this massive financing iceberg on the other side, what would you guide for? What do you think your guidance would be, right? Would you raise that guidance or would you lower that guidance? Of course, you would raise that guidance, because you know that you can get cheap financing in the future. And so there is a lower risk associated. There's a lower cost with further build out. Nvidia is going to be selling more merchandise, so they're going to be benefiting. And so this like circular growth keeps on going for the neoclouds as well, because they had a sneak peek onto what we're just now learning. Go ahead.
Yeah, let me just clarify one thing. You said cheap financing. It's not cheap financing. It's cheaper financing. So
cheaper, sure.
The real risk, or one of the challenges like recently, is again when you see all these bonds, corporate bonds, and what they're having to sweeten, like we saw that recently with CoreWeave, that just eats directly into the margins. So it's what they're able to sell is still so beneficial. It's fine, but it's a lot nicer to have something more stable. And 500 billion, yes, It may only be like double of what Google is expected to spend, Matthew Johnson, but Google is not borrowing all that. Instead, a lot of the other smaller players and even some of the hyperscalers will also. But I don't know that even the hyperscalers, like they might still benefit more just from doing their own bond issuance versus just because of the stable cash flows, like they talked about in the interview. Yeah, this is great for the Nebiuses. It's great for the CoreWeaves. It's great for the smaller plays as well. The APLDs, the Galaxy Digital, the TerraWolf, the site, all these, anyone that needs to raise funds or might need to raise funds, it's a benefit. So do you think that we're now at the point where AI is too big to fail?
It better be too big to fail, because if it fails, everything comes down with it. So yes, by default, I think we're too big to fail. It's similar to how you're saying like, oh, do you think the stock market is too big to fail? It better be, because this is why the money printer goes on every time that a crisis comes around. Because if the market fails, everybody's retirement, the entire like age of prosperity is done with the market. And so that's what too big to fail means. It means that if this fails, it drags down everybody with it and everybody's screwed. And I'm not talking about the North America. I'm talking about globally. We've been talking about this. I mean, the video that I sent to you, right, talked about the Japanese yen collapsing and how that can bring down the American market. And it just causes this cascading domino effect. AI is very similar. It's global. It's on top of all the software that we already use. And with the amount of investment that we're seeing, it's slowly becoming too big to fail. And you could make a strong argument that it already is.
It's actually kind of crazy how many corollaries there continue to be, like increasingly so, to the Roaring 20s, the 1920s. And now, I don't think that there's a Great Depression and a great crash in 2029. I do think that there's probably a bear market in 29 or 30. But I mean, those happen in whatever environments. But man, a lot of GDP growth, a lot of opportunity. And these firms, like, you know, a couple of people said in the comments, they look very closely at what they invest in. Doesn't mean they always get it right, but they're not just like, hey, let's just throw money out there because Jensen said something. They're very careful with that, especially after the SaaS apocalypse. A lot of them, like for some of these firms, almost a third of their money was actually invested in SaaS. And that ended up being a mistake that they're trying to correct and invest in other directions.
Mm-hmm. Yeah, let me just read some comments. So AJ says, all these banks will fund this. The government will have to step in and print 3 to 5 trillion to bail out the debt. These Wall Street cons will walk away with that bailout. Look, that's the bearish take that you can have, right? Now, the thing that will save you, and this is similar to when Doge started, the thing that was going to save, the conclusion that they came to was the thing that was going to save the US. What was it, Roy? Do you remember? It was faster GDP growth. We have to grow out of it if we can't stop the spending spigot, right? It's the same thing with AI. You have to find the efficiency of AI. Otherwise, this is a massive bubble. But if you find the efficiency of AI, this is the biggest investment opportunity ever, right? Because you're investing in the ground floor. Kieran says, yeah, go ahead, Roy.
No, I was going to just agree with you that I think that is one of the things that the market is looking for, is more evidence of what Jensen said, is that these AI factories, and of course, trickling down the neoclouds, that they will turn a profit at some point. Because you know, if you look a year ago or 2 years ago, people were thinking, oh, the profitability curve is much sooner. But instead, if the build out is more aggressive, that kicks the can a little bit later down the road. And that may continue to happen with CRWV NBIS. It's something to pay attention to. I always felt like the earlier targets were a little too optimistic or maybe pessimistic with the build out. So.
Guillermo here says AI just became too big to fail. That's the takeaway from this interview. It could very well be. And I think that's going to be the takeaway that a lot of people have from this interview. Yes, I will be at the Tanner Toronto meetup. Thank you, Starbucks, for a gold coin. Starbuccaneers actually followed me on like my personal Instagram account earlier today. And I was like, oh, well, how do I feel about this? But it's good. Yeah. I don't post on it that much, but that's a true fan, I guess. They're creating their own economy, Curtis says. Yes, I agree with this as well. Yeah, look, I think the thing is that you also have to consider is that once all of these institutions become so incredibly large, they still have shareholders, and the shareholders are going to endlessly seek out returns. That's a built-in feature of capitalism, right? But the problem is that with these hyperscalers, with the BlackRocks and the Blackstones and all of these guys, the Goldmans of the world, like they still need to find more returns. How do you find returns? It needs to be something that is as big of an opportunity as AI is to truly sink your teeth in, where the numbers start making sense. 500 billion in that context, it doesn't sound like a lot because AI, the potential for it is so large to completely change the world as we so far know it. If you were to pick a small company or anything else that we might talk about tonight, 500 billion will buy the entire sector, let alone the entire company. So you have to think about it from that perspective. It's the same reason why Buffett doesn't invest in small caps, is because he either buys the entire company out or it's not worth his while because it doesn't make a dent in the assets under management that he has. Same thing with these guys.
Yeah, I definitely agree with that. There is a super chat donation from Kryptonite. Thank you for the $5. He says CrowdStrike and Palo Alto have been mooning the last few weeks. Time to short for a short-term sell-off from people simply taking profits. I mean, I don't short, and you do you. If you do, I would be just careful and be quick to take profits. One of the things that it was one of the silliest things, and I wish, in hindsight, I thought it was silly at the time. I just didn't put money towards it, which happens. You only have so much capital; you can only invest in so many things. Was the idea that AI and its growth of all these agents was suddenly bearish for cybersecurity, which is the opposite. And one of those things that we have not talked about, and I'm in the process of writing an article. I actually talked with Tanner a little bit on it today. Matthew Prince, the CEO of Cloudflare, a little bit different style of cybersecurity, and there's a couple other sections that they're in as well. He noted, and this was like a couple months ago, that for the first time ever, this agentic traffic actually dwarfed or surpassed human traffic. And they see 20% of the internet. So it's not like a small sample size. And they project that over the next 5 years, that could multiply by 1,000-fold. With that, there's so many ramifications. And one of those is cybersecurity, a more pressing need for it than ever. So I think the market, like supercharging these and sending them up to the stratosphere, I don't think it's all just baseless speculation. So just be careful. If you do that, like people will take profits. It's not going to go up in a straight line. So you may, like if I was to bet, and I'm not going to do this, I'd probably say, yeah, it's probably worth a short-term play. But at least for me, I wouldn't be doing that because I don't short. Let's talk. Yeah. Okay, I'll give you your choice because I know how much you love Palantir. Do we want to talk about Michael Burry's new price target of Palantir, or do we want to talk about, and we'll do both, or CoreWeave and Nebius pre-earnings?
Do both.
We're gonna do both, but like, which one do you want to go first?
Let's talk about Nebius and CoreWeave first, just so I can.
Okay.
We're still on the topic of AI, right? So let's just.
So for context, CoreWeave reports tomorrow night, and then Wednesday morning is Nebius, and I should be live for both. I'll be with Tanner on Tuesday and Wednesday with Tevis and Nate and a couple others possibly. I'm not 100% sure on that. But back to back, and it's this different flavors of the exact same trade. It's going to be really interesting to see. Like on Friday, I told you I thought CoreWeave would probably go up. Historically, it's gone down by double digits, except for their very first earnings call, but it is trading at a lower level than it ever has before, despite the massive revenue growth. Of course, the backlog is massive and it's coming in. It's just a question of what the market most wants to see. And actually today, I've changed my mind on what I expect the movement of CoreWeave to be. I think it's probably going to go down some. And the reason why is we saw Nvidia move pretty significantly downward with this 500 billion move. And I think the market is just so focused and so concerned about CapEx and so concerned about debt, not for Nvidia, but for these other firms. And we saw, of course, these other names also sell off some of those early gains and fade and actually turn negative. It wouldn't surprise me if the market completely ignores short term, not forever, all the good numbers, which there's going to be a lot of good numbers. Probably EPS will miss. Revenue should beat by about 5% on CoreWeave. Could be a little bit higher as well. And then, they're all over the place on the CapEx stuff. So But yeah, that I think it's going to be another great quarter. I'm a long-term holder, so I've taken off my short-term trade. I sold for a very nice profit for those call options I had through September. I figured good enough for a screenshot, good enough for profits. With options, that's almost always true. So, Tevis, what do you think? Any thoughts on CoreWeave, and then talk Nebius, and I'll mention one thing on Nebius that I'm looking for.
Yeah, look, for CoreWeave, I'm mostly interested in the commentary around the demand and the build out, especially because in light of this Jensen interview, to see if this actually thesis plays out. Because if CoreWeave goes and raises guidance, if CoreWeave goes and announces some other, more favorable debt or anything like Nebius is going to trade on the back of CoreWeave earnings regardless. They're trading the very next day. It's going to be an incredibly volatile after hours and pre-market for Nebius because CoreWeave is going to give the market signal around what they can expect for Nebius. Those two will trade in lockstep based on the macro commentary that they have. So, yeah, am I doing anything with my CoreWeave position? Not really. I have covered calls at $100 on CoreWeave, but I also have puts for October at $70 as well as $90, and I have leaps for $120 for 2028. So I'm fine on my CoreWeave position, regardless of what they say. I think it's going to be overall good, but we're in a market right now, Roy, that can get hung up on the smallest little thing and drag the stock down as a result. So I just want to be over this hurdle for the most part. Now, the wild card would be if we get a big deal being announced. I mean, as we saw with like RKLB, right? Like companies will announce deals on earnings day. Nebius announced Meta on earnings day, right? So the next 48 hours are going to be super interesting from that perspective. If CoreWeave or if Nebius announces a big deal or some big expansion in their data centers, I think the thing with Nebius, I'm not sure about CoreWeave, but with Nebius especially, is will they raise that 7 to 9 billion ARR target, or will they reiterate it? Will they maintain it? And I could see a world where Nebius sells off because they just maintain that target as opposed to raising it again. Now, I don't know what's going to happen, but sort of those are the main indicators that I'm looking out for. Regardless, I'm still a long-term investor on Nebius. I want to see commentary on Vineland specifically for Nebius because I know that there's a lot of FUD going on right now around the Vineland campus. Although, I don't know if you saw this, Roy, but did you see the Data One CEO earlier today?
I did.
On the Vineland situation? That was really interesting. So basically, he tweeted, and what's his name? Charles. I have him here. What's his name, guys? Charles something.
Charles Barkley. Wait, no, that's
No.
a basketball player.
I'll pull it up. But yeah, here we go. This is a post from the Data One CEO. All right. So GK Capital here said, Michael Burry is short Nebius, blah, 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 blah. Now, this is the CEO of Data One. He says, I don't know how many mistakes Burry did since his only once-in-a-lifetime success, which is the great financial crisis, of course. And then Mark, in the retail community for Nebius, said, do you still stand by full delivery date on your website for end of December? Because, of course, we have a vote coming up on Vineland for August 17th. And he said, I can neither confirm nor deny with a little rocket emoji. And, of course, Mark said, look, I'm going to choose to ignore your words and only look at the rocket ship at the end of the sentence. I doubt we're using rocket emojis if that's not a yes, Jonah says. So, again, many people might say, hey, Vineland is a complete nothing burger. And obviously, it's just FUD. It's short-term noise, whatever. We are seeing pushback across the board, not just with Nebius, but across the board from data center construction, whether it's noise or water usage or electricity or any of these things. There's a lot of pushback, but it seems as though the early indicators are showing that Vineland is still on track. If Nebius comes out and reiterates that fact, I think we could be trading higher.
Yeah, I mean, I think that there is some credibility to the rumors that it may be delayed just because of the Bergen engines switching from that over to the Bloom Energy. A couple of other indicators too. I mean, people, It's one of those big questions, and in my mind, not as a shareholder, I think Nebius is great, and I'd hate it for you guys, and I also don't have money, but I'd love to get back in Nebius at 140 or so. But the reality is, I don't think it would fall that much. I think I would be a little bit surprised if they say anything other than things are going well. We're going to hit our ARR. We're ahead of our ARR. Vineland is fine. That there's no reason to be concerned. I expected to get asked a lot of questions about this, but that's the main thing that I'm focused on, honestly, with that earnings is what credibility is there, and I don't know. Like, obviously, like if things were going to be way delayed, they knew that there was no chance they would say that. But yeah,
I would imagine they would also come out and say that even before the earnings, like as a. Like when you have super bad news, these companies come out and sort of preempt it.
Some do, some don't. I don't know if Nebius has never had that, so it's hard to say. They had mostly good news. It's hard to say that whether they would or not, because not every company does. Some are just like, nope, we're just going to tank on earnings. Case in point, PayPal.
Which quarter? All of them.
Yes. Not really. Like some of the results were actually pretty good, but didn't matter. Stock down.
If it matters at all for you guys, I know it doesn't for most people here, but if it matters at all, the technical setup looks amazing for the upside for Nebius. So, I mean, that's the astrology lesson for today.
Yeah, the technicals I don't really weigh at all for earnings, just because a catalyst always trumps technicals, unless it's just been overheated or oversold. In this case with CoreWeave, like the technicals look very poor because it's sitting under the 50-day moving average. But yeah, I don't read too much into that. I think the results will matter. But again, I've shifted. I think there might be a pullback. You might see 5-7% down CoreWeave. I don't know that it'll end that way unless the macro helps it in the week. You can see in the past when CoreWeave has sold off, it recovers over the next week or two pretty quickly. Nebius, I think that dip would probably get bought up unless they said something really bearish. Like worst case scenario, what are we looking at with Vineland? Like, oh, it's going to be delayed by 3 months. Is that the end of the world? Is that the end of the thesis? No, not at all. So it's, I don't know. The market can be very short-sighted though, and it can surprise you with the price action. So what do you predict the stocks will do on both in earnings?
Price target, you mean?
Sure. Yeah, we can do that. So
go ahead.
Yeah, you can go first, and I'll tell you that you're right or wrong. All prices right you.
I don't even know, man. It's such a toss-up. Like normally I'd be. So I think with Nebius you have like some support in the low 180 range, and then if you break that, you're into like the 150s. To retest that low from back at the end of July. We're at 184.50 right now. I think if you have a good earnings, the implied move on this must be at least 15%. I would imagine. I don't have it up in front of me, but like if it's 15%, then that's like a $30 move. So call it, from 190 to 240, 185 to 235, something like that on the upside.
I believe, let's see, implied range. No, that doesn't. Okay. Yeah. Implied move for CoreWeave is, I was seeing 13. This says 14. I just use AI, so maybe it's off a little bit. It says Nebius is 16%.
Yeah. Sounds about right.
Yeah.
Yeah. Look, I think 230 for Nebius. Or 150, we test that low. That's probably
230. Well, that's if great earnings and everything goes on track with Vineland, and they announce a major contract, which I mean that could happen.
I'm just doing 15% up or down, bro.
Okay, yeah. It's still 230 would be
220, 230.
Watch your covered calls.
108
for CoreWeave, yeah, I could see it, be even up to 110 because I think the backlog, like if the market is focused on the backlog, I don't think it cares, even though it should, because this is going to be like a beat by 25%. It's a huge beat. They're looking at increasing their backlog by the same amount as they increased it the previous quarter. And like, it's not all like, hey, backlog that's like 10 years out, like almost a third of it, of the existing backlog is within the next like 18 months. So, but I could see it fall, you know, we might see like 84, 83. It's not fun. Like, will it break below 80? I don't think for long. I would be a little surprised with that macro help. And Nebius, likewise, like, I would be a little surprised to see it like below like 165, 160, but they would have to come out and be like, hey, Vineland is like way far behind, or Vineland, what are you talking about? We don't have like something weird like that. Otherwise, yeah. The one thing with Nebius though is, if there is weakness, if there is a chink in the armor, and there might be, like Burry is not shorting CoreWeave, he's shorting Nebius. And he is, like it or not, we're about to talk about him and Palantir in just a moment, very vocal with any chink in the armor, even if it's not a real thing. Like, he will, I won't say lie, but he will twist things to the point of incredulity just to try to get people to see things his direction. And like, so that could weigh a little bit more on Nebius's price action on the downside, if there is weakness.
Totally. But keep in mind that after CoreWeave reports, if in fact it is as good as you say it is, and CoreWeave is at 110 or 108 or whatever, over 100, let's say, Nebius in the pre-market is going to be at 200, if not, like even before the earnings. I think Nebius in sympathy is going to be up like 10%.
It would run in the pre-market, yeah. But again, I'm thinking that CoreWeave might pull down, 5-7% or so on very good earnings, just because that's what the market is focused on, I think, given the Nvidia news today.
Yeah, very quickly. What's Vineland? So this is their data center in New Jersey that's servicing their Microsoft contract, which is one of their biggest contracts. And basically, it got some pushback from the local communities because people are pushing back on data centers. And so the build out is getting pushed back. They have a hearing on the 17th. Okay, well, we're going to ban you next.
Yeah. Well, I knew he was joking because he had the quotes, but somebody may not know. So I was like,
yeah,
let him. Yeah, that one is a big thing. There's a reason why people are focused on it, and yeah, we'll. If they say nothing about it, that's when I'll actually be really concerned. But yeah, I think they have to, and they'll be asked for sure.
I can't push back stupid Burry and Palantir any longer. Go ahead, talk about it, Roy.
All right. Did you see this? What Burry talked about today on Palantir?
Yeah, I saw it.
Okay, yeah, Burry. He has added another short position. I think for next, it's either March or May.
March 2027 for $100.
Yeah.
Puts.
And he said that fine, it's the stock has run up because it's growing 93% year over year, and it's generating as much free cash flow as the entire revenue that they did a year ago. We've already talked about how good Palantir is. He doesn't believe it. He's not only just attacking it on valuation, he said crazy weird things about Palantir in the past. Today took the cake because what he said was, long term, he believes Palantir should be trading under $1 a share. And the man is not talking about Palantir doing a 1,000-to-1 split or something like that. He is talking, and I think that he's just doing it for clickbait, honestly. I think he's emerged more as a grifter, and he's just trying to get people to read things on a Substack. This is what I pulled from Fiscal AI here. So they have $0 debt. I was like, let me picture the debt, and it just doesn't show up, so there's no reason. Here's the free cash flow. Here is the cash on the balance sheet. They have, I believe, 2.2 billion shares. Either 2.2 or 2.4. He's basically saying, hey, I think Palantir, or I think dollar bills should cost 20 cents.
Yeah.
If you strip away the 93% revenue growth, if you strip away the moat, if you strip away the technology, if you strip away that literally every single corner is up and to the right, and that's one of the benefits of SaaS, especially when you're usage and consumption based, not seat based, and you have a great product like Palantir, it just goes up. There's times where it grows slower right here, like you see, but man, they are off to the races. And so to come out and say that it should be trading below $1, man, I think he's just tanking his own credibility. It would be one thing if he came out and he's like, I want to make a case for it to trade under $50 a share. Fine, you can make that case. You're wrong, But you can absolutely make that case, and you can absolutely say it's too expensive here and make those kind of arguments. What you can't say is it should be trading for less than $1, even though just the cash on their balance sheet is worth $5 a share.
You know what I should have done? Now that we're talking about it, I'm like, oh man, that was a great idea. I should have done it. I should have sold $100 puts for March 2027 and taken the other side of that trade, because I bet you those puts pay a ton of money. Hold on, let me actually look at it up right now.
They might like it. It's the volatility is quite high. Just it actually tapered off to not lows, because 2022 and early 2023 it was fairly conservative. I mean, it's still.
How much do you think those puts? Actually, they don't even pay that much. $3.
Yeah, it's run up too much. Like if you did like 150, it's probably ridiculous.
Hey man, the puts pay $3.50. That's 3.5 Palantirs according to Burry's calculations. Okay, for those puts. So
yeah. How much Palantir would you own if it fell below $1 a share and everything was great and good?
What's the float?
It's either 2.2 or 2.4 billion.
I mean,
like, why would anyone own anything but Palantir in that scenario? Like,
dude, but now that I'm looking at the premiums and I'm thinking about it more, this is a complete grift, because it is so cheap to buy those $100 puts for March of 2027. You can buy them for $3 that he can come out and say some outrageous junk. And
he will.
And like, it's so volatile that these things can double overnight based on something ridiculous that he says, and he can be out the next day. So, I mean, look, I thought the Nebius short was kind of ridiculous, but this one is even more ridiculous, knowing how cheap these premiums are.
Yeah, it's I like that. That's what Burry does, it seems like, these days. Now, as long as we've seen short sellers get in trouble for that in the past, like saying, "Hey, I'm going to have this position against them," and then they say something and they immediately sell and take their whatever gains. But yeah, like I don't know how to pronounce their name, but Zayas8. How can anyone take Burry seriously? Surely he's lost any credibility that he might have already had. Sadly, no. That's not the case. A lot of them take him seriously. A lot of people have no clue, and they don't do their own due diligence. Now, if somebody was following Burry and they're like, let me just look at the balance sheet real quick, they would find out really quickly. It's like, okay, maybe it's hyperbole, maybe it's sarcasm. I mean, the guy has said some outlandish things with Palantir. Like one of his previous most stupid argument on Palantir, and there was a lot there was a few that were like legitimate that you could take and you could say, yeah, that's fair. And the valuation thing, that was fair. I always said that was fair in the past. It's worth a lot more now, growing at 93%. But he was like, hey, Alex Karp owns his own private jet, and he's sure spending a lot of Palantir funds on jet fuel. Why? Because he is flying to places all the time and meeting with high-level government officials and high-level corporate officials, and as a result, they're growing 93% year over year. I'm not worried about the whatever, it's like $17 million when they brought in free cash flow of $1.2 billion last quarter. I'm just not. But he's like, oh man, Palantir, really, really a terrible company, so whatever. Let
me offer a different sort of take. How can anyone take Burry seriously? They do, not necessarily who the messenger is, but they do because of what the message is. Nebius, Palantir, these names, Nvidia, like these names are names that have run up. And if you look at the typical value investor, so many of them might be agreeing with Burry that all of these names have a lot of froth associated to them. Ironically, Burry should be shorting Lululemon instead of going long Lululemon, but you see Lululemon and you say, absolutely, this is a value, play. This is a stock that's super cheap and relative to their earnings, not realizing that this is a value trap, right? So if you have this entire generation of investors, value investors, that will look at Palantir and will say, this is outrageous. Maybe not $1, but it definitely deserves to be trading under 100. We'll look at Nebius and we'll say, this is outrageous. This thing deserves to be trading for $10, not $200. And in their mind, per their valuation metrics, their traditional metrics, they might be totally correct, but they just fail to realize that we live in a different world than the one where, Warren Buffett made all his money.
Yeah. A couple of people, since he doesn't own and operate Cyan Capital anymore. So Prince Pozo said Burry has to be trolling, though. No, he might be. But as far as like not buying puts, I think that he did. If he didn't, and he said that he did, if that's found out, and it could be found out, then that's considered market manipulation, and he could be opening himself up to a big lawsuit. So, yeah, I don't think he would have done that. I think I don't think he really believes that Palantir is worth under $1, because then I don't know what happened to him, because he used to be very intelligent. I would disagree with him often, but he's not an idiot. And it's funny because he made fun of Alex Karp for supposedly not knowing how to read a 13F filing. A balance sheet is even easier. And yeah, anyway, short sellers will do what short sellers will do, like them or not. And yeah, it's good entertainment though. And I hope the macro doesn't help him out this time, but I rarely hope that people lose money. He's one that I wouldn't mind seeing lose a little bit of money. He's lost a lot of credibility too. But like the thing is, people equate making money with credibility. And hey, it's great to be on the right side of things and everything. And he's made, he made an amazing call way back in the day. He's been right on some other things too. I wouldn't say that he's just a one-hit wonder, but that one was a grand slam. But man, I don't think he understands tech at all.
Yeah. Yeah. I mean, it's just, it's crazy, man. The dude peaked in 2008. Like if he had just stopped investing at that point and just retired, he'd be like a legend among legends. But then he just kept going short every single thing, calling a market top like 5 times a year, every year for the last decade. And it's just like, all right, man, like this is a little bit crazy.
Although he did say buy that Liberation Day dip. And yeah, so good call there. We were saying it too, but yeah. All right, you ready for Q&A?
Yes, I am. I think there's like more Jensen news that's coming out. It's dude, this is a crazy time to be alive. Like the fire hose of news is never ending.
Yeah, increasing.
Yeah. Ricardo, thank you so much for the 5 gifted subscriptions. I really appreciate that. All right, let's start Q&A. Let's do it. We got 36 questions that are bookmarked from you guys. Dr. Nam Nam says, what about VG? Yeah, VG is reporting earnings tomorrow.
Yeah. Let me throw this up. So it's moving. It moved up about 7% today. I'm not sure what it did after hours because I've not been watching. I've been with you guys and listening to earnings calls. Part of the reason why it's moving, there's 2 reasons. Of course, because earnings are tomorrow morning, and Tuesday mornings are the worst for me. I can't cover it live. I have meetings every single week on Tuesday morning. But you can see the TTF here. This is Europeans' natural energy market. Venture Global benefits predominantly from the spread between the Henry Hub here, the natural gas number, and the TTF. They're different unit economics, so just kind of keep that in mind. But yeah, this is good for VG. And now historically, it's nowhere close to what was happening here during the Russian-Ukraine invasion. But they've mentioned on their earnings calls and done a very good job of guidance and saying, hey, for every single dollar difference in spread, this is what we're looking at in terms of EBITDA. Venture Global is scaling incredibly rapidly. I believe 2 more ships. I know one for sure that came online. No, it was just one this quarter. And so, yeah, and they, of course, had a couple more deals as well. So should be a very good earnings. I think revenue is going to be actually a pretty nice beat, not just because analysts have done a good job of kind of keeping up with those expectations in terms of revenue as that spread widens or even when it contracts as well. But last quarter, we kind of saw where they didn't have quite the same revenue as I had expected. And it was my misunderstanding because, again, this is a name that I've been in now for 9 months, and it's not a space that I'm not a petroleum engineer or anything like that. So they had already contracted out and sold cargoes at the spot market before the ships even started selling. And then, of course, they take a while to land there. And so as a result, they didn't benefit as much or as materially from the spread for that quarter as you would have expected. But that falls in this quarter. You can kind of think of like there being essentially a month delay beyond what you would expect. So I think they'll have a very, very nice beat in revenue. They might even begin to raise the dividend price, although I would just prefer if they start buying down some of that debt a little bit more aggressively, which will in turn help them their credit rating eventually rise, and then they can refinance the debt as well. But man, they're doing very, very well. So I wouldn't be surprised. Like I think a lot of it is priced in, especially at these levels with the TTF. So I wouldn't expect Venture Global to be much above 16, or if it does, I don't know that it'd hold above that for very long. So not a new 52-week high, at least just yet at these TTF levels. A lot, though, does depend on what's happening with natural gas there.
That's a great breakdown. Thank you for the 10 joules.
Yeah, thank you.
Kieran says, I got $15 covered calls on VG. Wouldn't mind if it did nothing. I wrote today $14.50 covered calls on VG for this Friday, because if those get blown away, then I'm fine. I was going to sell, but then I was like, you know what? Like, I'll just do this instead of selling.
I didn't even write covered calls. I was just like, the premiums are not that juicy. And I do think, I think the revenue will be a very nice beat. And EBITDA likely as well. That'll be the main thing I think the market is focused on. But man.
Well, you actually want to hold it. For me, it was just a hedge for this Iran thing. And I don't think it's a thing anymore.
Yeah, makes sense.
Hello. Hit the like and subscribe button. Yes. Ricardo with 5 Roy gifted subscribers. Thank you so much, Ricardo.
Thanks, man.
Yeah. Let's see.
I believe 5 for you as well.
Yeah.
Okay.
Price prediction on CRWV after earnings. We already answered this. How would you go about structuring a 100K portfolio for a 28-year-old? Will you include ETFs to how many positions, aiming for 25 to 30% PA growth?
Portfolio, maybe? That's aggressive. Like, that can be done. I'm ahead of that, but I've only been doing personal individual investing since January 2021. So it's a smaller sample size. I would say probably aim for a little bit more conservative number and be happy if you exceed that. My own personal goal is to beat the S&P 500 by about 5%, which, that would be about 16, 17%, meaningfully ahead of that. But so one thing that you could do, I answered this question earlier with somebody who had a 100,000 pound portfolio that's also in their 20s. So rewind to that, use Gemini basically to find where that tag is. But figure out your risk tolerance and also figure out what your long-term goals are. Like, if your goal is to retire at 40, chart that out, see what the number looks like, see what kind of return you need to make, and then aim for that. Now, obviously, if you're like aiming for 100% year over year or compound annual growth rate in your portfolio, that's not realistic, and you're going to blow up your portfolio by taking on too much risk. But yeah, so concentrating on your core convictions. As you get closer to your goal, it usually makes sense to take risk off the table and then go into those broad ETFs. And I don't, if you have a smaller portfolio, and I don't know if you consider this small or not, it usually makes sense to concentrate in fewer names rather than like have 50 different positions that you manage, and know those like the back of your hand, however many you have.
Yeah. I see some people in the chat are saying 3x ETFs, go all in. Like, look, 25% is not a crazy hurdle rate. Now, 25% over the course of 10 years or 20 years will make you basically Warren Buffett. But 25% on any one given year is not a crazy hurdle rate. I think the way that I would go about this is depending on how hands-on, hands-off you want to be. I would probably go, if you want to be completely hands-off, then I would just probably go maybe a levered ETF, like a tech ETF or something like that. I would not go all in on one thing. I would probably try to divide it to 2 or 3 things. If you want to be more hands-on, then you can definitely make that with selling options on top, like your capital gains plus your premiums in excess of 25% per year. You can definitely make, especially if you're selling options on something that's volatile or aggressive, like Nebius, for example, then you could make 25 to 30% growth just selling them on Nebius just from premiums. But obviously that's inviting more risk than you might be more comfortable with. But at 28 years old, like, you need some level of concentration, i.e. risk, to be able to compound that amount. So know what risk you're comfortable taking. But look, if you say I'm comfortable with zero risk, then also be comfortable with zero returns, because that's what's associated. Like, there's no free lunch out here, right? You have to put your neck out in order to get some returns. And if not, then just invest in your bank, and your bank will invest on your behalf, and they'll make the profits, and they'll give you, whatever scraps are left over. So there's multiple ways to go about it. I would not diversify into like 10 different names, because it's not going to get you the returns you want. You might as well just go into an ETF at that point. I would probably go into, 3 names, maybe 4 if you feel more comfortable. And these are companies that you think can actually exceed. Each of these companies you think can exceed that 25% growth rate on any given year. And then decide how much you want to trim or how much you want to flip those positions on any given year. But a lot of them, like some of them will stay flat for year 1 or year 2, and then they'll go up, 300x or 300% the net third year, and then they'll make up for the first 2 years, right? And look, if Palantir goes to $1, then you can go all in on Palantir at $1. So
that's when to take on leverage.
Yeah,
all the margin. What's the XXX Palantir ticker? Give me that too.
Yeah. So that's probably what I would say. All right, next question. How do you track all this on top of the options you've done in a similar fashion? I have a spreadsheet that I use. And in that spreadsheet, let me just see what I do. So I have, what's the ticker, what's the account, what's the date that I opened, and the cost basis that I have on that position. What's the price when I opened, number of contracts, type of contract, strike price. What's the closing price? So like, what was the stock at when I closed? Expiration date, date closed, if I closed it before expiration. Premiums collected, delta when opened, strike to price, days to expiry, break-even price, premium paid, fees, return in dollars, and return in percentage. And so I just have like a massive spreadsheet of all the things. Yeah, that's how I track. Are you thinking about de-risking a bit on CoreWeave and Nebius tomorrow ahead of earnings? They comprise of 25% of the portfolio.
So I sold. I had a very small short-term options playing CoreWeave that did quite well, and I sold that completely. I have shares that I just plan to hold, and I have leaps for 120 strike December 2028. So lots of time on my side. I'm not going to take some off the table. I'm around like 18 or 20% of my portfolio, I think, because I have swing, which is the leaps, and then the 10% of the core position.
Yeah. I don't think I'm going to be doing anything ahead of the earnings. So we'll see what happens. If we
have covered calls?
I have covered calls on CoreWeave, and I think I have some covered calls on Nebius, but not a lot, like a super small amount.
So what price is it CoreWeave? Because that's what it's going to go to. Just a little bit above
$100. So it's gonna blast past 100 guaranteed.
I'll take it. Thank you for your sacrifice.
Yeah, you're welcome. And I'm okay letting those shares go, by the way.
Yeah.
So because I also have options, right? And so if it goes over, $100, then my options are doing very well.
Yeah, I did write some covered calls in CoreWeave. I think 125s is what I wrote them to. And but like you said, I have options, and I didn't do poor man's covered calls. I'm like, hey, I'm going to keep those in worst case scenario. Not all my shares, but most of them would be gone at 125. I just write puts on the other side of it.
Yeah.
I might actually just write. I'd probably rule out actually if it's close to 125, but.
Okay.
Next question.
Yeah, sorry. What sort of percentage per annum return would you expect from a portfolio that you guys have? What's your historical? As long as I beat the index, I think I'm fine, dude. If the index,
again,
I want to be 6%.
Do you have a percent return since you've been personally investing, or?
I think, hold on. So let me do this because I have a.
Well, while you're pulling that up, mine is like 43 or 44%. But it's, 2022 was terrible. Last year was good, but it wasn't amazing. And this year so far, it's roughly tracking the S&P 500. So you can say, hey, he's a kind of 2.5 year wonder. But I know I had some, like, that's the thing about investing is sometimes you'll just, you have like ridiculous returns on years. And other years are just good, solid years. So.
Yeah, I had a couple of years where I was like not beating the index, but the last 3 years I have been. So this is the post. This is 2024. I was up 113%. And 2025, I was up 28% and 48% respectively. And then this year, I'm up on the small portfolio, I think like 22%, and on the big one, like 62%-ish. But we'll see what it ends up at the end of the year. Like I make a yearly post around just the returns, just to keep myself honest. But yeah, there was definitely a couple of years in the beginning where it was a little bit of shaky, just until I sort of found my footing.
Yeah, once you hit like those big once you hit one big win, you're like, was I just lucky, or? And then when you hit a couple of them, it's like, okay, yeah.
All right. VG earnings, you answered that.
Yeah.
Thoughts on Nvidia 500 billion? We answered that. Go to 24-minute mark. You think the recent Nvidia news is bullish for neoclouds? Is it specifically for Nvidia chips? Banks raising 500? Yeah. So yes, I think it is bullish for neoclouds, and yes, it is for just Nvidia chips.
I think so. I think that's why. And by the way, Nvidia is not taking on debt. They're just using a large portion of their free cash flow for that project, in addition to the other ways that they bring it back to shareholders through dividends and buybacks.
Yep. Do you see Nvidia running further into earnings and probably dump after earnings, like always? If it happens always, it's going to happen again.
I mean, like like we saw with Palantir, people were like, hey, this stock never moves. And it sure moved a lot on earnings. I thought that Nvidia would last quarter. This quarter, I'm not so sure. We'll see. I own mostly shares and then the one leap. Which, I thought about selling and just buying more CoreWeave when CoreWeave was depressed, and I didn't do that. Kind of wish I did now, but yeah.
Do you think the market has put 2 and 2 together to see if this big Nvidia partnership today is going to go toward funding CoreWeave? I don't think fully at all. And keep in mind, like when Jensen stood up on stage at GTC and said, "Oh, $1 trillion in revenue," like Nvidia didn't move an inch from a stock price perspective. I think the market will put 2 and 2 together, though, if in fact we do see guidance raises, we do see commentary in the next 48 hours off NBIS and CoreWeave, and just more commentary there. So,
yeah.
If neoclouds dip on earnings, are you guys planning on buying that dip? Yes.
Yeah, that's one of the reasons why I sold the short term. It's a small bit, but now I actually have a little bit of cash I can buy rather than just like 1,000 or 2. So,
what's Tevis drinking? I was drinking tea and VG earning expectations. He answered it. I'm sure you own Accelera. No, I do not.
They had an update on one of their molecules, not products. Can't think of the name, but yeah, it was really, really good. Accelera was getting close to $10 a share. I didn't see how it finish out the day. But yeah, I owned it at 2 and took a small profit and was like, I'm just going to concentrate on core convictions. But yeah, it's one of the few biotechs where I'm like, I really like what they do. So congrats to shareholders.
Did I have the 4 kids tag turned on? I can't remember.
Hey, Real Madrid, it's probably because you watch a lot of Paw Patrol. So
yeah, that might be it. Your algorithm just feeds you what you want. So, did we already talk neocloud earnings? Yes, we did. Are neoclouds the new BMNR? I don't think so.
No.
Where do you see Meta in the coming months? They released open source model today. Yeah, I saw that. I see Meta higher. Meta closed the gap from their earnings like immediately within a week after the earnings. It's going to go higher. Oh, by the way, Roy, so I saw Microsoft back over 500. And you know what I thought? I thought, dude, this investing theory that we have, always buy the hated one. It's not going to be hated forever. Just works. It just works, right? Microsoft is now like, people are like, oh, is it too late to buy Microsoft? Can we expect a dip in Microsoft? It's like, you dummies. Where were you when it was at $350? Why'd you have to wait? But Meta is something that hasn't run. And I think Meta's time will come. Mark my words, within the next 6 months, we will see Meta over 700, maybe over 750. And people will say, oh, like, is it going to pull back to 500 again? No, it's not. So that's what I think about Meta.
Microsoft is holding up my fake portfolio. That and Oracle, they're up really nicely. So,
yeah, Meta will for sure run. Meta seems uninvestable. Oh, buddy, I think you're going to eat those words, Jay.
I mean, I think the lawsuit is why it's, at least partly why it's trading in this range. I don't love the company, but it looks really attractive to me.
Yeah. How good is Linus? Yeah, so I almost was going to start this. I haven't started it, but maybe I'll watch it at some point. It looked interesting.
That's a TV show?
Yeah, with Zoe Saldana. She was in Guardians of the Galaxy.
Okay.
Do you want me to bring you anything? No, just yourself. Do you own small modular reactor stocks? No.
I think a lot of energy plays, including this one, are good plays just because the demand is ridiculous. But yeah, I don't own any. The VG is my energy play.
Okay. Sorry, I'm just laughing at the comments. Ooh, yes, we will talk about the OpenAI buyback because I think that was interesting. Thoughts about CoreWeave bonds trading above 10%?
So they had to add a sweetener. Are they over 10%? I didn't think that they were over 10%. I mean, that's not great, but yeah, that's one of the things with this 500 billion announcement is it certainly helps with that. Oh, yeah, it is over 10%. Yeah, not great.
Okay.
Look, well, I can say a little more on it. Like these guys, even at that amount, part of the reason why is like huge capital X expenditures. But beyond that, the actual product that they're able to sell, it's ridiculous in terms of what you actually get back. And CoreWeave, like people, and I kind of blame myself because I didn't talk more about it. I was going back through in preparation for the earnings, the last 3 fireside chats, and then the last time the earnings, and they talked about in the most recent fireside chat, I think it's the JP Morgan Chase, but double check it, whatever one is the most recent, that they do prefer shorter term contracts, like 4 or 5 year contracts. They do have longer term, of course, with Meta going through the end of 2031 and 2032. Almost every single one of the contracts are take or pay contracts. There are some exceptions, but the reason why they prefer the shorter term contracts is you get a higher margin profile, and then you can turn around, especially when the demand is just relentless, and sell at an even higher price. So people have this misperception of CoreWeave that, oh man, these guys sold their product for such a lower rate and they're locked into these contracts for a decade. Completely wrong. Not a low rate. It was profitable when they sold it. And yes, they can resell it at a much higher rate. Likely through the next 5 years, we'll see what demand and supply looks like a little bit further out than that. But yeah, CapEx, it takes 18 to 24 months minimum to build out most of these projects. So, and the demand is just relentless. We just talked about it, 1,000x on agentic activity over the next 5 years. And that's from somebody that they see 20% of the internet traffic. So this is not good. Don't get me wrong. Like it's not good. It's worth paying attention to. It's not just FUD. It's a real thing. But I also expect that this level will probably help go down some, given this 500 billion amount, some of which would be going to CoreWeave. likely.
Dude, 10% is really high though. So
It is.
It's pretty high. So I mean, we'll see more tomorrow. But Mormon asks, can they refinance CoreWeave's debt, please? Yes, hopefully. Tevis, will you buy Nvidia? Not against it. It's just yeah, man. Look, if Nvidia goes down to 180 and Meta goes back to 750, then maybe I might flip flop and buy Nvidia next. We'll see. If AI fails, who's backstopping this finance deal? Taxpayers? Yes. Well, not really. The money printer. So bears now stashing cash under their mattress. I don't know what this is in reference to. Did they say if any of those companies are obligating any more than the others?
I didn't see that. I think Nvidia is contributing a lot, and it's not, they're printing a lot of cash. So, but I don't know which is contributing the most.
Which is the first company to a quadrillion? Dude, do you know how much a quadrillion is? Are you freaking stupid? Like, that's a lot of money. None of them. I don't think we're going to see a $quadrillion market cap company in our lifetime.
Don't insult one of my audience members, although that is not a great question.
Sorry, I didn't. That was like inside thoughts coming out. I just look. If we get to a $quadrillion market cap, like, you have to fundamentally rethink what is money, what is the economy, what is GDP, all of these things, and it's not going to happen. It's not going to happen. Yes, sorry for calling you stupid, but you're not stupid. Maybe your question's just fucking stupid.
It's open door, right?
Yes. Yes. This is why I have a real job. This is why I was just streaming full time. You guys are driving me nuts. Are you guys hedging CoreWeave? No. We answered this. I'm not. Okay, Erica. Hi, Erica. What would you do with $95 in your IRA in the next month? I have felt somewhat frozen in the past month, just collecting premium through cash secured puts. I need something to do with it, but what and when? Why do you feel frozen with cash secured puts? Like, if you're making money and it's a good amount, like, annualize how much you're making from cash secured puts. And if it beats what the market is doing right now, then keep doing what you're doing. Like, there's no reason to take on extra risk just because you're feeling some FOMO right now. I'm sure I can give you some names that I still think are cheap that I would buy, but that's not the point. I think the point is that you feel stuck while you're collecting premiums, because if you're collecting premiums, it means you're not getting hit. And if you're not getting hit, that's a good day. Like, I'll happily make, 3% a month, because in 12 months, it's 36%. You're beating the market. You do that for long enough, you're going to be a very, very rich person. So
yeah, even if you're making 2% consistently per month,
sure.
I mean, that's above a 25% gain just because it compounds, and that's phenomenal. Like, if you guys, many of you guys on my channel are members. I actually showed what my investments looked like in 2003, a long time ago.
Really?
Some of those I didn't touch, and so we talked about just those alone. Like, if your time is on your side, let the market work for you. You don't have to have crazy gains all the time. Like, even at the compounding rate of, I think it was like 11.5% or something. Those have done very, very well for me. They've allowed me to invest a lot more aggressively, because I'm like, hey, if everything got blown up that I'm doing over here, I can still retire.
I would have shown you what I was investing in 2003, but my mom threw all my Pokemon cards in the trash can when I was a kid. So unfortunately, I don't have those anymore. Thanks, Mom. Roy, you have a large option play on CoreWeave. Are those leaps or shorter dated?
Sold the small, shorter dated. Nice profit there. Leaps are up pretty nicely too. They are December 2028, $120 strike.
Yeah. Is it true that Tanner and Chris have major beef? I have no idea, man. I'm not their guidance counselor nor their therapist. I haven't heard anything like that. Based off the Jensen roundtable, are you thinking about rolling your CoreWeave covered calls if they reach break even? Nah, I might let them go, honestly. And the reason why, like, I would roll Rocket Lab but not CoreWeave is because I have a huge Nebius position, and so I would just have like an insane amount of exposure. And honestly, man, like if I can get out of my cash secured puts for CoreWeave unscathed, i.e., if CoreWeave is above 90 by October, then I'm a very happy camper because those leaps are going to do some work for me going into 2028. I don't need the shares to. Like, I'm bullish CoreWeave. I have a, good chunk of money in there. I don't need the shares too.
Yeah, when leaps go deep in the money, I mean, they at a certain point, it's they're like shares, and you can still, if you're in options, right? Poor man's covered calls. Yeah.
Do you think this Nvidia news will allow these neoclouds to become profitable a lot faster? No.
Opposite.
Yeah.
Opposite, because it'll increase the pace of capex. And
Yes.
as a result, because of that, it's a drain. It's a negative short term on EPS. It kicks the can a little bit further down the road. It's the reason why, if you look at analyst revisions, the EPS keeps getting revised to be a little bit further out for profitability. But they were always like a little bit too far ahead of themselves. Like, that was really obvious when I was like a Nvidia shareholder at 24. I was like, they're not hitting profitability by this year, but the year after maybe. So.
Nor do they want to, because could they hit profitability? Yeah, sure. They turn off the spending hose and all of a sudden you're profitable, but you're not growing. So it's going to help them from a growth perspective, but not from a profitability perspective, because you have to spend money to make money.
Yeah, there's 2 or 3 years of very aggressive, assuming everything looks really good on the demand side, build out, and they'll before that ends, both these companies should be profitable, but their goal is not. You'll hear it from all different kinds of companies, not just data centers. Like, the goal is not optimization of EPS; it's growth, and that's the right approach almost always for shareholders. Is to have that long-term vision, not focus on like, hey, over the next 2 quarters, let's make as much money as we can. I mean, you see that with SoFi. You see that with every single company that's out there. That's a good quality company. You see it with the hyperscalers, even like that. Is Google really focused on like, hey, let's make sure that the next quarter looks really good? No, they're raising a ton of money. They're spending a ton of money rather on capex that is not going to be immediately profitable, but is very accretive. It's the right approach. Follow the big guys that are really successful. That's what Corey, that's what Nebius, that's what Iron are doing.
I love how you also looped an Iron to the big guys, but yeah, sure.
No, I'm saying they're following the big guys. So the 3 are the largest, the pure non-hyperscaler names.
Yeah. Lisa asked, do we know why Fastly went up crazy today? I think it was up like 20% or something, but no, I don't know, basically. Is there life on one of Jupiter's moons? Ooh. And what do we think the meaning of life is? Okay, cool. Good question. I like this. Yes. Is there life on Jupiter's moons? Which is it, like Titan we're talking about? I think there was one moon with water.
Europa, I think.
Yeah. Maybe like bacterial life, but other than that, probably not.
Yeah.
What do you think the meaning of life is? That's a good question. I mean, biologically, I guess, to continue your genetic composition, but I don't think that's what you're asking. I think you're asking more of like a existential type of way.
Yeah, I mean, I'm a Christian. I believe in God, and so I think that we're put on life for a purpose. That there are some purpose that all humanity has in common, but there's also special gifting, talents, abilities that you're given and put in place in certain points. Bible calls it to be salt and light. So basically, to be a blessing, to help make things better in the world, whatever flavor that looks like. There's a much longer theologically robust answer that I can give, but I think for Q&A, I'll put it there. So that meaning, like as far as like there is a purpose, there is significance. What you do is not meaningless, and it's easy to, whether you're an atheist, and I used to be, just be like, nothing matters. I'll just be a nihilist, or a Christian of like, hey, it's all going to burn up in the end. I'm going to go to heaven, and just to put no value in this life, and that's a mistake. This life is significant. It has value. It has purpose. And the highest value, I think, that there is in this life is fellow humans and humanity. It's one of the reasons why I approach things the way I do.
Yeah. I don't know. I would say like some form of fulfillment. Like I was gonna
Oh,
say
yes.
happiness, but that seems very hedonistic to me. You know, Aaron, try to reach euphoria every day. Yeah, that's it's a very hedonistic view. But look, I would say some form of more sustainable long-term happiness, which I think is mostly found in fulfillment. And that cannot necessarily like you can make short-term trade-offs for long-term gain in that pursuit to say, I am gonna decide to go to the gym today because it kind of sucks while I'm doing it, but I know that I'll live a more fulfilled life, or I have a sense of responsibility that I have to uphold. But that sense of responsibility, just having it, will give me more fulfillment. Anyways, rambling. Zubair says, "Please say a stupid fucking question again." But yeah, hope that helps. That's a great question.
So-
Thank you for asking.
I had to look up the verse because I in Ecclesiastes 5, I quoted this one other time, but it says, God has given riches and wealth to every man. It doesn't mean material wealth necessarily. And he has enabled him to enjoy them, to accept his lot, and to rejoice in his labor. This is a gift of God. And so, like what Tevis said, I don't think it's wrong. I would not put it like hedonistic and pursuing your self-pleasure above everybody else. That actually doesn't add value, and that doesn't produce usually long-term happiness. Usually when somebody sets a target on something, and then once they hit that, if they're miserable, it's because it was the wrong target. Yeah, probably enough for that answer.
Yeah. Biofraud says Dr. Roy was a Vatican monk in another lifetime when I was a raccoon. Yeah, if you were a raccoon, bro, I was like a freaking caterpillar or something. Just yeah. Okay, finally to Zubair's question. He says, are you guys going to buy Rocket Lab at this level, or will you wait till 65-ish? Considering I bought it under 65, I would say I'm going to wait.
Yeah, I only have a little bit of money to invest right now, so in earnestly, I like to kind of hold into that. So I would probably wait. Yeah. Oh, I mean, I for sure wait at this level. At 65, I think I'd still be waiting.
If there's ever a bootleg weekly on a Sunday, we get Preacher Roy. I mean, hey man, if enough people want it, you're gonna get it. Meaning of life is seeing Burry get it right for a second time, bro. That's not what you want. Your happiness is contingent on other people's misery, and if that were the case, I would rather my happiness be contingent on Burry's misery for Nebius to go to 400. So,
amen. Yeah,
amen to
that. Preach, brother.
Yeah, exactly. Yeah, we have a common enemy in Michael Burry because he's sorting both Palantir and Nebius.
Not really an enemy, but yeah. It's all good fun.
All right, Zubair. 2 questions. Didn't he just ask a question? But okay. Anyway, it doesn't matter.
Yeah, he
are you guys? Oh, it's the same question. Tevis, can you? Are you able to sleep properly at night knowing you sold your BMR position? Probably easier. I sleep at night, dude. That thing went to $12. I sold it at well, first of all, I sold 1/3 of my position at $19, and I still have 2/3 of my position, dude. I have like a 6-figure loss that I'm sitting on BMNR. Like, I hope you know that when you say I sold my position, I'm still sitting on huge freaking losses. But at the same time, what I sold that 1/3 of BMNR on, I bought ServiceNow, and then I rotated that money and I bought, CRWV and Rocket Lab. So that money has, if I had sold all of my BMNR position, I would probably be up way more than what I am with a 2/3 holding BMNR, if that makes sense. So from that lens, I sleep great at night. $100 billion Nebius market cap this year. It's like $400 a share.
Yeah, a little north of 400. You think it's going to hit over 400 this year?
He said, "Can we see it?" Yeah, we can.
Why not? Can we? Yeah, no, that's not the same as will we. Okay, I was like, oh, okay. The man's bullish.
Yeah, I mean, we can. What guidance should they need for something like that to happen? I'll tell you how that happens. Okay, you ready? Here's what happens. I'll actually give you a very clear breakdown of what needs to happen for Nebius to hit $400. Okay, number 1, you sign Google. Okay, 33 billion Google deal over 5 years for Missouri, just as it was rumored. If that deal is announced, you're already having a bump. You increase the 7 to 9 billion ARR guidance for this year, and next quarter you bring up guidance for 2027 to be very bullish, above the range. Once all that happens and you have a favorable macro environment, let's say it doesn't get hit too much by midterm FUD, then you could definitely see NBIS at $400 rallying. Now, the extra cherry on top, number 4, is if you have Anthropic or Amazon, so you can collect them all on the hyperscaler charts, because then you'll have Microsoft, Meta, Google, and Amazon, then you're definitely going to be knocking on the door for 400. Technically speaking, it looks good, primed to go higher, but you need catalysts, and those are the major catalysts I would be looking for.
You just reminded me of something that I found fascinating. It's from I believe this weekend, so you would have shifted a little bit from today, but the Wall Street Engine noted this, and this is from I believe FactSet originally, that 82% of S&P companies have now reported, 86% have beaten EPS estimates, 75% have beaten revenue estimates. And I noted here in this post, like, it's usual that more than often than not that they beat. It's 76% over the past 10 years for EPS and 68% for revenue. But when we're sitting at double digits increase, 10% higher on EPS, like and this is like a real number. It's not just revenue inflating. This is on the S&P 500. Like, dude, we're not in a bubble. Like, there might be some bubbly names. There is certainly in private equity as well. But man, so per FactSet, S&P 500 growth companies have seen aggregate earnings growth at 50.4%, but a lot of it is because of the SpaceX unrealized gains there on those large companies.
Yeah.
Still, like, man.
Hey, man, if it were a bubble, then you wouldn't have these earnings that you do. But for the fact that you do, it means that people are seeing productivity improvements from AI. Point blank.
Yeah.
What percentage of the portfolio do you hold high beta stocks?
100%, not really.
70%.
Yeah, it's a high percent. Like, Nubank is one that's not, and VG, I guess, is not, but like, it's moving like it's a high beta stock. So I don't know if that one even counts now.
Boy, I had a beautiful, beautiful morning. You know why? Because the entire portfolio was down except Amazon and Meta were both up over 1%. And I looked at my portfolio. The small portfolio was getting crushed. The big portfolio, which is where I hold Amazon and Meta, it was up like 0.5% or something. And I was just like, I'm not down to, like, SoFi was down, Nebius was down, CRWV was down, RKLB was down, like, everything was down. I was like, I'm up. Beautiful feeling, dude. It was. Oh, yeah. And then everything else, fell towards the end of the day. It didn't last long, but it was great while it lasted. So just that 30% of being in Amazon and Meta, it's a fantastic feeling once you get it right.
Yeah. I was actually up today. So yeah. Air Test Systems. Let's go.
I thought you actually showed, like, without the blurred out.
No. Air and Palantir, did pretty nicely, and so it's barely up, but it's still, like, on a day like today when a lot of things are down, it's nice. VG too, like, very nice.
Yeah. What's the meaning of life? Having a green portfolio every single day. Amazon at 200, Nebi said 100, and Nebi said 100, bro.
Easy, yeah.
Yeah, easily. This is for you. In the US, selling covered calls on a stock resets the 1-year period until its long-term capital gains if you've held the stock less than a year. Roy, how do you deal with this?
I actually didn't know that. So I would say, Julia, for me, outside of swing positions, usually my goal with the shares that I'm selling calls on, I don't plan to sell the actual company. Like, I'm just holding it long term. So, like, Palantir is one where some of the cover calls went way underwater, and no, actually for them, I don't know why, but it was a a couple things. The difference between long term and short term capital gains is narrowed under Trump. For long term, it's even gotten better. But second, I don't remember paying, despite them being underwater covered calls, short-term capital gains. I'm pretty sure it was long. I need to double check. It was a large tax bill because there's a lot of profit. It's a good problem to have. Beyond that, I rarely, unless it's to rebalance or something like that, end up selling a position. And I have a lot of my money tied up into the Roth and the IRA. So, that's one where you don't have to worry about the taxes until, for the IRA when it's time to take it out. It pauses the time. Okay. Yeah, that would be why. Yeah, no, that I learn something every day. I did not know that. I need to look into that. Thank you. Yeah, but yeah, for the most part, like my strategy, the way it works is if I was wheeling, it would be a whole different thing. And I would be like really unhappy if I got that tax bill and I was thinking long-term and it's actually short-term. But yeah, the long-term stuff, no. And there's a lot of names too where if it's really depressed share price, like SoFi right now, the premiums are not that good. I don't write.
Nope. Yeah, I don't write on it either. Well, I mean, I do, but like, I don't like
around earnings. I did, but that's because I'm like, hey, they're giving away free dollars, so
that's true. They don't do much on earnings; they just fall. I just ordered a burrito, so we have a clock that we're working against now. Still own BMNR? Yes, I do. Did y'all look into Ondas? Not so much.
Yeah, a little bit, but not enough. It's
OpenAI buying back $7 billion in stock. Did you see this, Roy? I sent this to you.
I did. Yeah, you I think liked it. I think that they're burning a lot of cash. I don't think that now is the time to buy back their stock, even if long term it makes sense. Like short term, you're burning a lot of cash. Keep that cash runway preserved.
Yeah. Yeah. Let's go with that. Tevis, Roy, have you looked into Reddit? Not really.
A bit, yeah. Don't really like it's kind of like Meta for me. Very attractive for a stock and evaluation standpoint and what they provide. I really don't like that form of social media, so I don't think I can invest in them. I don't dislike them as much as Meta, but yeah.
Is Tanner still in BMR? Dude, I don't know. Tanner is so like, there's people who like openly talk about their investments and I can see their portfolio with the dollar values and everything. Tanner's not one of those people. Tanner's like, hesitant to tell me even what his top 10 is. Not dollar amount, not percentage wise, just what they are. But no, so I don't know. Long story short. Roy, since you're so bullish on CoreWeave, when are we getting the merch for the background?
I mean, yeah, I don't know if they even have merch. So, yeah, I am hoping to. We'll see. Yeah,
bro, did I miss this super chat? I'm so sorry, Kevin. Cheesesteak or meatball parm for lunch? Meatball parm for sure.
Yeah, it depends. Like if you're in an area that has good cheesesteak, man, that all day. But if you're in an area that's just okay, in Houston, like Jersey Mike's is probably the best cheesesteak that I've had.
He's in the West Coast.
Yeah, so meat parm is good. It's hard to. That's what I've had most recently of these two, and I like these sub sandwiches.
He's at lunch and it's like 8 p.m. So that's my best guess, I guess.
Now I'm hungry.
I know. Thank God I ordered a burrito. All right, let's hurry up here. What happens to CoreWeave and Micron goes back up over 1,000 since they have hedged against the stock?
So they didn't hedge against the stock. They hedged against, they talked about, I don't know that they did. One of those things we might hear in earnings. They have a pricing floor on the cost of memory, and that's what they've considered hedging against. That, I believe, is actually the real, if you want to focus on a bear case, is if the price of memory becomes commoditized and it just falls off a cliff, because it is cyclical, although this is a hyper cycle. I don't know what those pricing floors look like and how long-term it is, but it's one of the things that they did both to secure the pricing levels and also the supply, which is why they were able to bring things online. So they are looking at doing a hedge against memory prices, not on the stock itself.
Yeah. How do we know that tokens will always be profitable? It seems like China is dedicated to stomping prices in the ground. Yeah, competition is going to lower prices across the board. It's just, is the demand strong enough to overpower that competition effect or not? But this is going to get,
Look at the Javon's paradox.
Exactly.
I mean, it comes into play. If you don't know what it is, just Google it, put it in an LLM or whatever. It's going to play out exactly like that.
What do we think about Micron after today's investment meeting? Honestly, I'm getting more and more bullish on Micron, especially at under $900. I think I kind of want to own some Micron, to be honest with you. But yeah, I don't know where I'm going to find the cash for it. Is AI the new crypto? No. When will
two
crypto come back?
fundamentally different things, and you both have tremendous things that they're very good at doing. Figure technologies, like if you want, it wasn't the interview that I did, although I did touch on it. There was an interview right before the interview I did with the CEO of Figure, where he talked about, because he was asked by this analyst, he's like, essentially the same thing. Like, what's the point of crypto when you have AI? He's like, okay, you misunderstand. There are actually AI, Tom Lee is right on this, that a lot of AI applications actually fuel the use of crypto. That doesn't necessarily mean that Ethereum is going to go up to like 50 billion or whatever he says. But you have microtransactions. How does that work? Again, it's with crypto. You have like, look what Cloudflare is building with this toll booth system that they have with agents. That's crypto right there. AI plus crypto. Look at what Figure Technology is able to do as far as all these efficiencies with crypto. And also, as on the development standpoint, also AI. So it's just, they really go hand in hand and both help each other out immensely. If crypto didn't exist, AI would still be incredibly exciting, but it'd be just a little bit less accretive. And same thing with crypto versus AI. The one other thing I'll mention is crypto is always going to be cyclical. That doesn't mean 4-year cycle always, every single time. AI is like the internet. It's not going to be cyclical. There will be times where it grows faster, times where it slows down, but the direction is very clear and it just keeps going in that direction.
All right. I would ideally love to play a game of chess with Roy before I hop off. So I'm going to try to answer these. Jack says just donating because Roy is a Heat fan. I mean,
let me know what you think of that trade, Jack. It should be a fun year.
Davy Jones, question for both. What would be the 2 stocks that you're forced to lock into your portfolio for the next 5 years? I mean, I'm probably picking like larger companies here. Next 5 years?
Yeah, Nvidia has to be one of them.
Yeah. Amazon, maybe? Let's just go with that. Let's just go Nvidia, Amazon.
Yeah, I think that's fair.
Nebius 100 or Meta 400?
Nebius.
10K one stock pick. You can only sell it in 10 years.
Nebius. I can't do Meta, so.
No, but like ignore that for a second, if you could.
Yeah.
Dude, Meta 400 in 10 years is going to be like a steal.
It would be Meta, apart from my own personal conviction. I think Meta.
If you think about it, like Meta's at 1.5 trillion, right? Like, where is it going to go? Whereas Nebius at 100, the upside is way higher.
So, like 10 years out, you're talking about a scenario where we'll see if the metaverse, if something actually comes of it. I think that it will. And who is going to better capture that than Meta? I think AI fuels that. I think what they're building long-term fuels that. It'll take time, but not 10 years' time. You also have the whole Meta compute thing. So there's a lot of growth levers for that company. Nebius, I mean, I think both will be really, really attractive from those levels. But yeah, Meta is the safer play. Meta is the easier play. It might even be the outperformer in that scenario.
Let's not go too far, but sure.
No, like seriously, like the metaverse. Think if that actually becomes real. Basically, they become the gateway to the new internet, the metaverse.
With what fucking chips are they going to power the metaverse? Like, it's not, dude.
Long Nvidia.
If Nebius at 100, like, dude, if Nebius does a 4x, they're $100 billion company from that price. If Meta does a 4x, they're what, like a $6 trillion company? Like, what? What are we even talking about here? I mean, the risk is if Nebius, like, for whatever reason, goes bankrupt or goes to zero or gets crushed, or like Meta would win by default. But if we're talking about purely upside potential, then Nebius absolutely has more over that time span, even if the Meta becomes a thing.
So the big thing is not just upside, but you can only sell it in 10 years. Meta is deeply profitable. They might lose that for a while just because of the CapEx build out. But again, like they did in 2021, they can turn that off if they need to. They won't. But NBIS, is there a scenario where they don't make it in 10 years? Yes. I don't think that's a very high scenario, but it's possible. Meta, it's hard to see that.
Yes. Agreed. Erica says, I found the cash from Micron by blowing up my Amazon position. RIP.
There you go.
But congrats. What's your go-to meal when your portfolio is up big? Sushi.
Yeah.
What's your 2 biggest conviction bets? Yeah, I think we answered this. Have you talked about OpenAI's rumored new hardware? I'm hoping they become a real competitor to Apple. No one has truly been able to compete with them in volume chips. Dude, it's really hard to build hardware. I don't understand why people think this is easy. It is really hard to build hardware. That's all I'll say. I'm not saying Apple can't be disrupted. I'm just saying like it's going to take a while.
Yeah, it's especially if you're a software company building hardware. There's a few that are able to do that, but those are just absolutely unique, amazing companies. By the way, Jack, thanks for the second donation. Go Heat.
Thank you, Jack. All right, we got 10 minutes until the burrito's here. Do you want to play a couple games?
I'll play one. Let me add in these bookmarks to the thing. You guys are welcome to stay online if you want. We're not really talking investments. We're just going to play a game of chess right here at the end.
We could talk investments too, but
yeah, we can. You're better at that than I am, just because I have to concentrate because I'm way worse at chess than you. So yeah, you hit a new rating.
Yeah. Are you sending the invite?
Sorry, I'm adding the bookmarks real quick so I don't lose those. The timestamps. And then let me close all these just so. And I don't know why it keeps having me log in every single time. I don't know what's going on with my internet. There we go. And oh, actually, you want to send me the invite because you set it up.
Yeah.
Yeah. Raven says Tevis has to answer all the questions to give Roy a better shot.
Sure.
Certified betting $5 on Tevis. Like me too. Can I be in on that bet? Like what you don't understand. Like the rating system. I'm like around 900. Tevis is like 1900. This is like playing a 5-year-old at basketball as a grown man. You're not going to win unless you are like, hey, I'm only going to use my like left pinky, and then maybe. So yeah, I have very little chance here.
I'm playing with Tevis without a queen.
Yeah, Tevis does like to throw a queen anyway. Oh, you were able to delete the queen. Wow.
Yeah.
What it shows deleted on mine on your screen that you're. Oh, there we go. Yeah, it's because it's flipped. Okay. All right.
Amazon versus Temu.
Pretty much, yeah. No, I don't think you guys understand. Like,
dude, I want to play you guys in chess. Yeah, we can do that. I mean, we can do a full like chess stream. That could be fun. I have to answer all the questions to get. Yeah, I mean, I could do that too. We were gonna play like time odds. That could have been fun. See, normally I'd go with queen, but I don't have one.
Yeah. Yeah, it's so weird playing with no piece there. I'm like, okay, I need to be aggressive. I need to trade.
Yeah. Yeah, this is.
But I also don't like giving up a bishop for a knight usually.
When I have like a gap in my freaking thing. Yeah, don't screw this up, Roy.
Yeah.
Name every stock I've ever bought. Dude, I used to do a lot of like trading, so I probably wouldn't be able to name every stock I've ever bought. I mean, I could, but not this moment. Roy, you need to use AI to help.
Yeah.
I want to see Tevis eat that burrito. Yeah, dude, me too. Can't wait. I'm like tracking it on my other screen. I don't know what you're threatening because I have no queen, but Yeah, Lichess Bullet is intense. But like that's more of a game of speed than it is a game of skill. Because Bullet is like crazies. Steak or chicken? Ooh, good question. Depends on what the goal is. Like, am I it's like a working out thing, but would go chicken, but taste, I might go steak. Yeah, you guys can keep asking questions if you want. I think Roy would just want to trade stuff off. Just fine. Oh, the burrito. Let me check. I think chicken. Yeah, chicken burrito. But it's crispy chicken burrito, so it's even better. My fave two people playing my fave game. It is the best game. It truly is. It's quite a nice game. Oof, that's an interesting decision. Burrito from big chain or local mom and pop? This is from kind of like a local mom and pop, but not really. It's like medium. Where was I in Europe? I went to Albania, which is where I'm originally from, and then which like I'll go every now and again. But also went to a couple of other places. Went to London, went to Germany, Italy. Yeah, it's like really nice, man, in Europe because like you can just travel around like a lot, and it's super cheap. It's like 50 euros to go wherever you want, basically. Let's see. Any chess stocks? I don't know what would be considered, chess stocks, but okay. I don't like that Roy is over there. This feels like a shaky position for me. Let's see. Let me go. Top 5 cities in Europe. Ooh, depends on what your goals are, I would say. There's a lot of like really fun cities in Europe. Eastern Europe, man, it's a good time. I understand Tevis will be attending the August 15th meetup. This is correct. Roy is not attending. Real Madrid says I'm going to honeymoon in Italy at the end of the month. That's great, man. Italy is always a fun time. Let's see here. This is interesting.
I don't like when you say interesting.
I'm just trying to figure out how like risky we want to play this. I feel like I kind of just want to mess around a little bit and risk losing this game. Yeah.
Yeah, and keep in mind, it's a win with an asterisk if I end up winning.
It's fine.
Oh, I don't like that.
All right, back to the questions. Romania, no. Albania. Nebius up or down after earnings? I would say maybe more likely down. Screw it. Let's say up. Best country for people watching. Densely populated countries are the best for people watching. Let's see what else. Roy super focused. Dude, I want to go to Romania. I think Romania would be a really cool country to visit. I have a friend. He's Romanian, and yeah, I don't know. I feel like the culture is like super close to Albania. I mean, a lot of the like Eastern European countries have a super good culture. Hey Tevis, want to apologize for asking about Tanner and Chris. Dude, honestly, I don't like. You're not offending me. I don't care in the slightest.
Yeah, Chris is bullish on SoFi, so I doubt that they have that much beef. Oh, you took. Okay. I could still lose, but I felt like that move kind of really helped me.
You're good, man. Give me a good location in Albania where I can see a cool old town. I was there once and beautiful. Yeah, I think if you want to see an old town, I would say probably Gjirokastër is one of them, and then Berat is another one. It's like the older towns. Dude, I'm totally losing this game. I'm like down 12 points of material. This is insane.
Yeah. Glad my queen's there. Yeah, I know if Tevis gets a draw, it is a huge win. I mean, he started off just giving me a queen, which is because I need the queen. Otherwise, like, man. Okay. We were just going to play this ultra safe. Sometimes when you're pretty far ahead, you're like, same with stocks. Honestly, there's a lot of correlation between principles you learn in chess. You got the 0DT guys that are like, hey, let's go for the scholars mate every single time. And like, oh my good. Oh no, I'm fine. Whew. I for a minute I was like, oh no, I really messed up. I don't think so. Yeah, it's so hard to play down that much material. So
I'm trying to figure out if there is anything here. I don't think so.
It's going to be rough when you're like, okay, Roy, I'm just going to give you a rook. I don't know if I can win. Rooks are not that good early game, and man, you build these positions whenever like that are just so hard to penetrate through. No, I feel like that pawn was your opportunity, and the one move I made to force the trade was what was needed there. Otherwise, like it was scary. If I was your same skill level, like a queen ahead, you would never be close. But I'm so bad compared to you. Yeah. So I guess if you guys play chess, if you guys know your rating, put it in there. I'm kind of curious what you're at. Davy Jones, yes, I do. I am bad at chess. It's actually in my. Oh, that's interesting. I see what you're doing. No, thank you. Take it with a knight. You can back it up with a rook and try to force that through. So. And then, okay. Like the other thing too is like they don't know the history of me playing you. Like you're very, very good. And so like the few times you make a blunder, I'm always like, Is this some sort of like weird high level thing that I have no idea about?
It never is. I just do stupid stuff.
Well, it's funny because there's some younger guys that I play, not very often, but in the community, and they're probably rated like maybe 600, and they've still beat me a few times, like fair and square, but. I mean, like I'm so far ahead, I could sacrifice a queen for a bishop and be okay, but I'm not going to.
Probably.
Yeah, probably, maybe not.
Problem is, I can't sacrifice anything at this point.
Mm-hmm. But I also can't take that unless I want to lose a queen.
Miserable game, but it is what it is. Oh, that's interesting.
All right. Good try, though.
God damn it, Roy.
I know the one way you can win. I'm like, no.
Everything's on a freaking black square, man.
Yeah, that's how I like it.
How does one break through here? You can't. This is just miserable.
Want to trade?
Oh. Why did you do that?
Three for five, but when you're up 14.
Not the point, Roy.
Oh. Yeah, that's bad. Because I'm pinned, and then you can come right in and take the rook, but not for free. It's still a trade at the end of the day. Yeah, definitely not ideal, though, because it lets your rook come in.
This is over.
Yay. Yeah.
One more?
Yeah.
All right. You guys going to be here in a bit. All right. Let's go.
Thought you were going for the Stafford. I was like, all right, let's see the Stafford. Is it a good gambit? Yeah. Is it a fun gambit? Yes.
I like never play e4.
Yeah. That's what I play. Yeah, I don't know that I want to chase that. Man, so many players at my rating, they go knight c4 or not knight, bishop c4, and they just walk right into the knight takes pawn, and then the double with the queen.
You'd have probably gotten me on some stupid stuff like that because I never play e4.
Yeah, some of the best advice that I was given on chess was, just play whatever you play, just keep playing it like a lot.
Yeah.
You will learn it like the back of your hand. As many trades as you want to make, I'm good with it. I mean, I probably need to get my king out of danger here. As much as I would love to take that.
Somebody said Jesus is helping Roy.
Tennis is, because he gave me his queen. All right. That feels better.
Yeah, meatball parm over cheesesteak, in my opinion. Hold on, I think my food's here. Let me just grab it 1 sec. You can move.
Notice how I moved right after he did that. Yeah, I don't know if I wonder if Tevis has played in a chess tournament. I did up through 5th grade. I was actually really, really good in 2nd grade, and I never really got better. So I got 2nd place in a couple of state tournaments. But yeah, when you are not that good to begin with, or you're not really improving.
Chess tournament? Yeah, I played when I was a kid.
Nice.
Played in a couple. I was like really good at like 12 or something, and then I just like stopped playing for like 20 years.
Yeah, it happens.
Okay.
Some random person's gonna be watching this like way later and just like, let me skip to the end and see. And like, what in the world are they playing?
Yeah, what are these guys doing? We should make this a part of our pods. At the last 10 minutes is just chess time.
Yeah. Let's go and activate this guy.
Dude, I left because my food was there.
I'm missing something, I guess.
No, you're not.
Okay.
I was like, oh man.
Like that's the thing, guys. Is like you think, oh, like when they're so much better than you, you're like, it's surely not a blunder. Like, how is this?
Oh no, it totally is.
All right, thank you.
I was like holding my breath. I was like, oh shit. I saw it immediately after I clicked it. I was like, God damn it.
Yeah, I'm like, okay, if I take that, the bishop can force me, but I just take the bishop with the queen or the king. Okay.
I don't even know what I'm doing here.
Whatever. We just play, bro.
Yeah, whoever said Jesus is helping me, yeah, I think that was one of the indicators.
This queen is doing so much work for you.
Well, that doesn't really work. But I'll do it anyway. But will I? No, I won't. Fine. Oh, well. Yeah. But honestly, it's okay. You play differently when you're 14 points ahead.
Yeah, seriously, you just don't give a shit. It's a lesson in life.
A rook for a bishop? Yeah, why not? A queen for 2 knights? Why not?
I mean,
no, I just feel without your rook, I don't think that there's a way you can win this. Or a way that I can blunder this, in other words.
Yeah, it's like, well, I would have 2 bishops. I don't know what I can. And you have 2 bishops too. But let's not do that. Okay. Fuck. God damn it. Stop giving me that same trade.
I want to. I want it now. Okay. I mean, I'm almost tempted, but we can just do.
All right, I gotta go eat.
1, 2. Yep.
Yeah, that's GG.
Good game.
Good games, plural.
Yeah.
You gotta start giving
Victory with 9 points of material gifted. All right. Well, thank you guys for those of you that hung with us even through the chess stream. 100 on my end. Wow.
do this more often.
Yeah. And as always, you guys, yeah, it's the best community ever. It is.
It definitely is. Thank you, everybody, so much. We'll see you soon. Oh, yeah. By the way, we're doing NBIS earnings live on Wednesday morning, so definitely join us for that. And then we'll see you on Friday if not. Good night.
Good night.